Welcome to Stuck Time to Improv. I'm Mary Scott with Business Riff, and I want startups to be wildly successful. So we're going to be talking about how to make sure your money is properly accounted for today. I'm very happy my guest is Brian Ludwig CPA. Welcome, Brian.
Hello. Thank you for inviting me to your show.
Thanks for coming. So, putting books together, do you want to tell us what are books and what kinds of things need to be included?
This is where I challenge my business clients. Don't just think about taxes. That should be at the bottom of the list of what you should be using your books for. Rather, you should be asking yourself, okay, what kind of information do I want from my books to be able to answer some basic questions about my business operations? Like, for example, if you're developing a lot of new products and asking yourself, what should I be focusing on? You want to track your cost of goods. So you know exactly what is the cost of providing that service and selling it.
And you track those things by being clear about what categories expenses are and what subcategories things are, right?
Yes, you can be as detailed as you want how you track this. Break your sales down by product or by location or by store. You have the flexibility to do that.
Another thing is that startups need to make sure that their business bank account is in a different institution from their personal bank account. You need to keep them separate, even though you're just starting and you're using some of your own money. It needs to go from your personal account into your business account as like founder investment and then keep them separate, right?
Yes, especially if you get hit with a tax audit a few years later. This is where there's nothing worse than having a bank account that you use both personal and for business. And that's where auditors, they love looking at, here's all these deposits. We're going to assume this is all business income unless you can prove otherwise. And that's where you might have got a gift from your parents for Christmas, but unless you got proof of that deposit, they're going to throw it in as business income and tax you on it.
Sure. I developed a category called loan from owner when I'm putting money into my business account to cover things.
Yes, that's where it's important to track those type of expenditures. So the best, if you can keep your business and personal transactions completely separate,
right,
that'll make your life a lot easier, especially if you get hit with an audit.
Right, and don't use your business credit card for personal expenses.
No, that can create some issues.
Definitely. What else does startups need to know about getting their books done right the first time?
Well, this is where I would recommend keep it simple at first until get used to doing books. Probably the worst thing you can do is just come up with this elaborate set of books that's going to track everything. And then after a month or two, you give up on it or you start cutting corners. Because as a computer programmer would say, garbage in, garbage out. If you don't enter the information consistently in your accounting system, there's no sense keeping track of it at all. I would recommend just asking yourself, what are some of the key questions you want your system to answer? Set it up to do that. And as you get comfortable with your books, that's where you can get more detailed as time goes along.
Sure. And find a system where you can enter receipts very soon after you get them. And if you're not going to do it yourself, then hire a bookkeeper.
A lot of financial institutions, they allow you to download bank transactions directly into accounting software. So that simplifies a lot of your tasks. What I would recommend in that case, try to buy everything with a debit card or check or credit card so that it goes through that banking system so that you can download the transactions.
Yeah, if the IRS wants to see, you have to come up with a receipt or they don't allow it. That's just how it works, right?
And don't rely on like a credit card statement that says, oh, I bought this from this place. they
Mhm.
still want to see the receipt because
Right.
they might say, yes, well, we recognize you bought something from this store, but how do we know that what you bought from them is a business item or a personal item? That's
Right.
where the receipt comes in.
Yeah, another place where startups will leave money on the table is in mileage.
Oh,
And if you can download an app that helps you keep track of your mileage, particularly if you're going to a workshop or you're going to a speaking engagement or you're meeting a client, that's all business mileage.
yes. I've been doing this for over 30 years, and I can probably count on one hand the number of times I mention a travel log and how many owners are happy to keep track of a travel log. It's not exactly a favorite topic, but this is where, for the little bit of work that's involved, whether you do it by hand or electronically or using a spreadsheet, there's lots of apps out there. The benefit you get from claiming your mileage and tracking it far exceeds the value of your time that to keep track of this information.
So is there one big mistake startups make when it comes to their books?
Probably the biggest mistake I would say is they just don't do it. Whereas if you
Right.
do your books, it's much easier to stay on top of your business performance and make changes as you need to, as you identify it.
And a strategy for growth is knowing where you are at any given time and what you're going to need going forward. And you can't do that if you haven't kept track.
Yes. Like one common thing I come across is this is where, like, cash is the lifeblood of any business. And I've seen people just kind of go along, keep running their business, but in reality, they're actually draining their cash, and they don't see it readily because they're racking up their operating loan balances or credit card balances, and all of a sudden, they hit a kind of like a debt ceiling where all of a sudden they can't buy anything more in their credit card. It's maxed out. And then that's when they realize what's happening to my cash. And that's where, if you had a good set of books that you're monitoring, you could identify some of those leakages and try to fix them before it becomes a problem.
Sure. And until you've established your business credit, your personal credit is your business credit. And
Yes.
paying off those credit cards in full every month is a good way to get your credit score up there, right? Do you have a favorite software you like to use?
Well, being a professional accountant, I tend to use higher end software like QuickBooks or Zero. Uh, a lot of it depends on what kind of information you want to track. Like, for example, if you actually want to keep track of your accounts payables and accounts receivables, essentially, you want to know exactly who you owe money to and who owes money to you at any particular time. That's where you will likely need one of the higher end programs. But this is where, be warned though, if that's the kind of information you want, you have to be prepared to enter your information more on a daily or weekly basis, because there's not much sense tracking your accounts payables if you're not entering your bills the minute they come in and record the payments as you pay them right away.
Well,
Yes, and they
thank
tend
you
to be,
very much, Brian Ludwig, CPA. This has been very informative because we want startups to do it right the first time so they don't have to fix it later. And this is Mary Scott with Business Riff. I want startups to be wildly successful. And one of the best things you can do is book a synergy call with me at businessriff.com. And join us again next time for Stuck Time to Improv.